Welcome to Volatility 411 for Equity Armor Investments. I'm Joe Tigay. Let's jump right into it. On the day after the election, the S&P 500 is trading lower today, less than 1% on a muted move following the election. Maybe the market's looking or waiting for more results to come in. We'll have to wait and see. But interesting, the VIX is also down today after the election. We had the reverse yesterday, market higher, VIX higher. Maybe we had to buy the rumor on the volatility front, sell the news on the volatility front. We are beyond that market moving event now, and maybe we'll just have to wait and see. Now, just because the election's done doesn't mean we have any shortage of potential market movers the rest of this year. Just the rest of this week, of course, we have a lot of Fed speakers, and we have that critical inflation data. So I expect the market to be moving on those, and of course, the volatility is pricing that out. We have the VIX at 25. That's still elevated, of course. Now, it's in the middle of its recent range, maybe on the lower end of its recent range. We've seen the VIX bottoming out around 20, topping out around 35 so far this year. So we'll have to wait and see. It's not really giving me a clear signal either way on the market. Again, we'll have to watch it as we go. Now, the good news for the S&P 500 is that it is above its 50-day moving average. It's falling 50-day moving average. So I'd love to see, and the bulls would love to see, the S&P 500 stay above the 50-day moving average. That can flatten out. We can kind of build off of that. Now, the bad news is that the rally that's brought it above the 50-day moving average has really been led by industrials and old tech. When I see a market bottom, I usually see technology and the semiconductors and the growth names. They're leading the way out of the bottom. Not seeing that right now, so I'm still kind of waiting for that to happen. Also, we still have interest rates close to their highs. I think bulls, it would be really good for them if those interest rates would be pulling back. And finally, watching gold, that has been on a tear lately. That is the ultimate risk-off play. People worried about a recession and high inflation. The stagflation trade would be to get out of bonds, get out of stocks, get into gold, and that has been very strong lately. So that is another troubling sign for the market. For Equity Armor Investments, I'm Joe Tigay.